Good morning, everybody, and welcome to the Daily Energy Markets podcast. We have Brent crude oil trading just below $74 a barrel, down a little bit after a bit of a bounce yesterday. We have sort of come off the October highs that we saw earlier in the month, with the stress in the Middle East giving a big peak on the oil price. Seems to have given all that up. Let's go to Vandana Hari, founder and CEO of Vanda Insights. Vandana, your thoughts on the direction of travel. It sort of was a question we were asking at the beginning of the month, or maybe more, I would say the second half of the September. Where is this oil market getting it from? It got direction from the unfortunate, obvious place of geopolitics for a few weeks, but again, it seems to be wandering. Your thoughts on the direction of travel for the oil markets?
Good morning, Sean. I think in terms of direction of travel in the very short term, I see it sideways. And after that, which I think the turning point would be either Israel stands down, highly unlikely, or it goes ahead with the threatened attack against Iran, more likely, my base case scenario, but that one turns out to be mostly symbolic, similar to what we saw in April. Once that happens, I think that's basically the inflection point. Demand concerns come fully back center stage, and that puts a downward pressure on oil. Now, what that means in terms of prices, as you were just mentioning, Brent sitting around 74 today. If you compare it with the peak, the recent peak of the most geopolitical fear premium that we saw was about a fortnight ago, $80 for Brent. So yes, I think, and you had on your screen earlier, has it given up all of the geopolitical fear premium? I don't think so. Once the remaining premium goes off, which I would say another $3 to $4 is what crude could easily shed. So I would see the equilibrium point for Brent probably around high 60s, or let's call it around 70.
Let's welcome Omar El Obeidly, Director of Research, Bahrain Center for Strategic, International and Energy Studies. Omar, geopolitics, as we said, has always been close to this drama of the oil markets in recent months, perhaps, and obviously in recent weeks. We have Secretary Blinken once again returning to the Middle East today. I think I saw the note at the 11th or 12th time in the last number of months to try and put a solution together for the Israel attack on Palestine and Lebanon. Now, your thoughts on the outlook for any resolution to these fires burning in the Middle East?
Well, I agree with Vandana's assessment of Israel's likely direction. And unfortunately, I don't see. Although I slightly disagree with her in her optimism that things might calm down relatively quickly. I expect things to continue to kick off. I don't expect Israel's response to Iran to be more towards the cosmetic end of things. I think they're quite happy to escalate, because this is not just about a retaliation to the attack, the missile attack. This is now about the nuclear weapons issue, and there are many noises in Iran from the hardliners saying that they believe that the only path for them to maintain their own security is to develop a nuclear weapon. And Israel has, in the game of chicken, has made it clear that this is not an acceptable outcome under any circumstance, and it will use highly kinetic measures in order to ensure that. So I expect that after the strike, first of all, the strike will contain a signal of what they're willing and able to do regarding Iran's nuclear ambitions, and I expect Iran to accelerate its efforts to signal its ability to defend itself using a nuclear weapon, and that will lead to further escalation. So really, I think things are going in the wrong direction.
We don't see that in the oil price, obviously. Why do you think what is your sort of analysis on the delay, right? We're talking now 3 weeks since the 1st of October that the Iranians struck at Israel in this latest round. There's obviously counter retaliations on all sorts of levels in the region, but ultimately in this latest round that sort of recognized as some kind of dramatic round, 1st of October, Iran strikes Israel. Israel yet to retaliate. What's the delay? How do you interpret that?
Well, I mean, I think both sides have a long history of using the tactic of we'll respond at a time of our choosing, both because this is a tactic for sort of maintaining the advantage, and also because, in the case of Israel at the moment, they're preoccupied. They've got major operations going on in Lebanon and in Gaza, and so probably they're not in a rush to respond to Iran. And I would add to that I probably there's some pressure from the Americans for them not to take something too drastic. So there's probably some negotiations. And going back to your opening or your remark just now, that's probably one of the reasons that Blinken is visiting at the moment, because he probably is trying, most likely unsuccessfully, to convince Israel to scale back its response. But yeah, this is not a video game where they have to respond immediately. They have other priorities, and there is definitely a tactical advantage to be gained from leaving the opponent uncertain as to exactly when you will respond.
Brian Pieri, founding member of Energy Rogue. I mean, ultimately, with our selfish interests in this story, Brian, it's all about the risk to supply coming out of the Middle East. And it seems to me that supply is the big sort of question mark going forward into the fourth quarter, deeper into the fourth quarter. We talked about the risk to Middle East supply and this geopolitical escalation, but there is also other supplies, US supply, Latin American supply. What's the outlook going forward? We've seen, and you've again called it right this year, I think one of the few analysts that called US shale production on the nose, so congrats to you on that. What do you see the outlook for US Latin American oil supply that could sort of jeopardize the stability of this market?
Yep. So that's a great question. On the supply side, the US and Canada has been adding just a teeny bit of production, and the US has added maybe 100,000, 200,000 barrels a day over the course of the year. And I do expect a slight tick up in the fourth quarter, but not that much, because there's kind of some financial measures that producers are incentivized to bring on anything and everything they can in the fourth quarter, because it frames up their annual reports for their lending season for 2025. So I do expect a slight tick up, probably nothing more than year on year, maybe 200,000 to 300,000 barrels a day higher. Brazil has been the one that has continued to surprise. Venezuela has been a steady march up. Guyana added a lot at the beginning of the year, but is kind of flatlined because there's some infrastructure and downstream issues on the supply add there. For 2025, the US, it's probably going to be a wait and see. If we stick at the current price level or down where the current prices are sitting, I don't expect much rush to activate rigs, which means the US would likely be flatlined. So they need a higher price. When you look at the cost hurdle, investors are looking for a higher cost. And with the concentration of larger resource plays being acquired by the majors now have access to international markets where they might deploy that capital instead of US markets. So there's kind of that aspect as well. So for the remainder,
what about, Brian, just wanted to plug in on that a little bit. You told us, in the past, the challenge, variety of reasons why this shale play has maybe not added or brought back. There's been the transition of the majors buying out these big shale operators, and that the paperwork, if you like, for change of ownership has kind of delayed the deployment of capital there. Now that that's over, does that change anything? Just the dynamics of now the big majors own all of these big shale players, all the paperwork's done, and now actually they can actually pull the trigger on some production. Is that going to change the outlook at all?
Well, I think what you have seen over the last 10 years is a rapid expansion in areas such as the Permian that were purely held by single venture capital backed, PE backed companies that were trying to prove up a resource. And their goal was to drill as much as they can, as fast as they can to prove how much resource was in there so that they could ultimately sell the company to a major. So I think you're going to see a methodical slowdown of the development of the resource because in that rush to prove up the resource, they actually do some things that impact the long-term longevity of the wells. And so this is actually a fundamental flaw. So I actually see that there's going to be a slower, more deliberate process that is going to be more like a slow march than a rapid development. So the rapid developments that we've seen over the last 10 to 15 years are going to ultimately slow down as it's gone into the majors, because the majors also have another variable. Well, they somebody like Chevron or another entity may want to choose a project in Guyana instead of drilling more in the Permian. So it's probably going to be a more portfolio-based decision, because when you compare that internationally, the majors have other opportunities where the holders of those assets 5 years ago, their choice was to drill or not drill the Permian. And now it's Chevron can drill the Permian, drill Guyana, work on a project in Nigeria, work on some other international venture that may have better economics. So I see a slow march on U.S. development for the U.S. shale.
Of course, Vandana, they can do all of those things if OPEC and OPEC Plus continue to provide this sort of gold-plated runway for all of these big majors to produce these high-cost assets. Your outlook for where OPEC Plus goes now, we're only 5 weeks away from the increase, or at least the planned and announced increase by OPEC Plus. Demand looks like it's, where it is, where there's no, China's doing okay, nothing great. America is on its trajectory. I mean, demand looks predictable on some level with little marginal corrections, perhaps. But supply, where does OPEC Plus go now?
Yeah, and that's a great point, Sean. I was listening with quite intently to Brian's insights on the U.S. shale sector, and I think one of the features that we also need to keep in mind with regard to shale growth is that they do sort of piggyback and rely on OPEC Plus, keeping demand and supply just nicely, tightly balanced, and hopefully WTI somewhere above 70, if not above 80. As far as OPEC Plus is concerned, I see really very little maneuvering room for them going ahead. We've seen they postponed bringing back the 2.2 million barrels per day. It's now going to start on the 1st of December. I think they are playing it quite cautious in giving it a full year to bring that 2.2 million barrels per day back. Of course, that could change midway. But my base
I mean,
case,
of course, that 2.2 is only the beginning in December. So I think in December, it's only like 100 or 200,000 barrels.
Yeah, fair enough. Exactly. So that's the point, that they are playing it very, very cautiously. So on top of that, then to expect them to halt it or to reverse it, I think one would need to see something really dramatic, drastic happening in terms of oil prices, which is not my base case scenario at this point. So 2025 is looking a little bit oversupplied, is looking like there's going to be more downward pressure on oil prices, but I don't see anything as bad as to justify OPEC Plus bringing back those cuts. And I think it's also important to bear in mind that this 2.2 million barrels per day is being shouldered by just 8 members. So, just for their sort of OPEC Plus's internal cohesion, cooperation, I don't think it's going to be easy for these 8 members to continue. And within that, we know Saudi Arabia is doing more than its fair share. So Saudi Arabia and the other 7, I don't think it's going to be very palatable for them to do anything other than now stay the course of bringing it back over a period of 12 months from December. which means they have to make peace with whatever that does to prices. So the combination of more OPEC plus oil coming in back into the market, demand growth remaining sluggish in 2025, is pointing to an average for 2025 for Brent and TIs being more like in the 70s rather than the 80s that it has been this year. I think OPEC plus has reached that point where it's simply just going to make peace with that.
Omar, your thoughts on the same question? I mean, we talked in our earlier commentary about the sort of immediate geopolitical face-off between Israel and Iran, but of course, there are many other states and actors in this region, and I wanted to get your thoughts on assess this, how this could impact or their influence at all on the outcome of where this goes, and particularly because, you know, from our interest, the impact it can have on oil supply from the region. Where do you think the other actors go with this?
You mean
do they have an influence? The other countries in the region, yeah. I mean, does the Americans care about what the Saudis think at this time, or this is a fairly substantial domino you're suggesting is going to be pushed over here by Israel, and that of course has massive ramifications for all of us in the region. I'm just wondering, do the other actors in the region have a say in this? Can they influence the outcome, or what considerations do the Americans have as they try to contain Israel when they consider the domino that's being pushed over here?
So I think it's, first of all, regarding the Americans, their stated goals, which is de-escalation, have been pretty clear and consistent since the beginning of the crisis, as has their lack of desire to take the steps necessary to realize that goal. So I think what will happen, obviously, it's the situation is rendered more complex at the moment by the US elections, but whoever wins, I fully expect a sort of quasi hands-off the steering wheel approach by the US, and Israel doing more or less what it sees as in its inner interests in the coming period, and the same regarding Iran. The rest of the countries in the region, which mostly have a relationship with Iran, are trying their best to de-escalate from that side, but I think that it's a tough sell given the actions that Israel is taking. And so I think that despite the desire of all other actors in the region to de-escalate, ultimately they're going to pay a price for not having the sort of military capabilities that Israel and Iran do have, and for outsourcing security tacitly to the US for decades, meaning that when the US, develops a disinterest, as it has done of late, they are left with very limited levers. And add to that all these oil market issues, which mean that the wealthier Gulf states can't even use financial instruments to push their foreign policy agenda as easily as they would have done, when oil prices were around $100. So it's a fraught picture, and it looks like we're in the Titanic when we can see the iceberg ahead of us, and it doesn't matter what happens to the steering wheel, we're going to hit it.
What about, just to follow up on that, Omar, because one country we haven't mentioned and is obviously probably pretty critical, at least in the impact here, is China. China, the world's biggest oil importer, it relies on the Gulf for a lot of its energy. Iran, it's practically pretty much 100%, it takes 100% of Iranian oil. And yet they're not overtly in the front of the saying or impacting events, but certainly in the background, they will have, the domino you're suggesting that might be pushed over here, potentially some serious ramifications for China. Your thoughts on where they interject in this equation?
So China has, multiple conflicting goals. You alluded to one of the most salient, which is maintaining stable oil supplies for its economy. But on the other hand, it also wants to, first of all, demonstrate the US's inconsistencies in its positions, international positions. And for that, when Israel, violates international law, that's something which makes America's position look weaker on the international stage. And secondly, it has a tacit affinity for conflict in the Middle East with Israel, because that's something that brings the US into the region and distracts the US from its other strategic goals, which is maintaining its competitive posture with China in in the Pacific and Asia region. So I think in the proximate goal, I think the economics is clear. They don't want an unstable region, but the geopolitics says, well, an unstable region keeps their primary adversary in all sorts of a pickle. And you can see this when it comes to, we've got the Russia BRICS summit coming up now, and there's like 20 leaders coming across the world. And I think an important part of Russia and China's ability to build a coalition that is not 100% aligned with the US is the US's perceived stance regarding what's going on in the Middle East. So in that sense, it pays dividends to China.
Brian, a lot of this talk and the geopolitics, there's a kind of a in limbo way to hold your breath until the US election is over, and then clarity may emerge on a bigger scale, a bigger stage. But ultimately, my question to you, Brian, is in the context of America inside the United States energy policy, the fundamentals of what we were just talking about earlier, the Permian, the most sort of infamous action this year by President Biden to suspend licenses on LNG export facilities. On the granular end of US energy policy, putting aside all the geopolitical strategies and noise that each of them may bring, as we look to the election in 2 or 3 weeks' time now, does the outcome have much bearing on the fundamental nuts and bolts of US oil and gas energy production exports?
It will, but it takes about 2 years to really filter in from a true fundamental supply and demand. These policies are very slow moving, and one of the overarching ones that Biden launched in his administration is the Inflation Reduction Act, because there was a lot of prohibitive oil and gas measures that were inside of it, and some of those measures were quite drastic. In other words, if you look at the U.S. oil production at 13.4 million barrels a day, 13.3, something like that, half of that comes from oil and gas infrastructure that has been drilled over the last 40 years, 50 years. And some of the aging infrastructure, about 50% comes from old infrastructure. That old infrastructure, if the measures that were in the Inflation Reduction Act were actually enforced, about half of the U.S. production would be shut in. So these policies are very big. They are starting to walk back because somebody has finally gotten into the ecosystem and said, wait, time out. We can't just cut half of our oil production. That won't happen, because the methane emissions penalties would be so cost prohibitive that it would cut so much of the production. So I think you see from the Trump side of the equation that there would be a relaxing of policies and whatnot. It still wouldn't move the needle. Price will move the needle. That's going to maybe be on the margin. That'll maybe tick it up 5 or 10%. Kamala's platform is a little bit more centrist than Biden. I think she's walking back closer to the center from some of the green policies, because I think they're seeing that many of the technologies on the green side were just not quite there yet. So there's a lot of wanting and desiring to get to the green policies. But the fact of the matter is that people in the United States would have to deal with brownouts and blackouts, and I don't think there's a tolerance in the Western world to deal with blackouts or brownouts. But that may be typical in other parts of the world. But I did want to finish off, and I wanted to ask a question: how it feels today, Sean, to be 20? Are you 27 today or 28?
Well, that would be the day I was doing something very different. I was directing theater plays in Edinburgh. That was a whole other life. Let's go to the survey question today, which is again a question I'm kind of thinking a lot about at the moment, because I think it's kind of is the next real North Star for the market, all else being equal. Do you expect OPEC Plus to proceed with oil supply increase on December 1st as announced, despite the lower trending oil price? OPEC will continue as they said they would, yes or no? That's one of the kind of, I suppose, part of the answers to that, if I was OPEC Plus, that I'd be looking at is China going to succeed in what appears to be a stimulus train that they're on? They haven't quite, they put the pedal down a little bit and accelerated. Are they going to do more? Is it going to change the sort of trajectory of travel for Chinese energy demand? Your thoughts on the outlook for the continued commitment to stimulus in China?
Yeah, so if you just go by the headlines, Sean, starting with the last week of September, which was just before the country went into a week-long Golden Week holidays, it's been a blitz. At least the headlines make it seem like a blitzkrieg of stimulus, right? But if you just boil it all down, what it is that, okay, a fair amount of monetary stimulus. So a lot of rate cuts, a lot of basically banks, RRR cuts, banks being encouraged to put more money into the market. Beijing trying to put more money into the coffers of the provincial governments. So basically, just for Beijing to get this flood of money back into the system. What a lot of China observers and analysts have pointed out is actually it has fallen flat, and that's my characterization, fallen flat in terms of fiscal stimulus. And that's what really was needed. So you may make all of this money at lower borrowing cost available to corporates, available to households. But then in the end, what is their sentiment? Are they going to feel encouraged to borrow, to spend, simply because it's, 25, 50 basis points lower borrowing costs? And the answer to that is probably not. So what that translates to for the oil markets is two facets. So first of all, not great consumer sentiment, no desire to spend necessarily. Property sector not doing too well. So diesel demand, gasoline demand, it basically the stimulus package means zero for these two products. And I think the writing on the wall for these two is pretty clear, that they are either close to their peak, some say even past their peak demand, but okay, let's call it close to peak, maybe 26, 27, we see peak in diesel and gasoline demand. People have argued, and the Aramco CEO was speaking here at the Singapore International Energy Week yesterday, and he pointed out, he said he's very bullish on Chinese oil demand growth, and he zeroed in on naphtha and jet fuel. And, fair point, petrochemicals capacity is expected to grow. But then again, I would, urge people to look at, so where are those petrochemicals going to go? Ultimately, it needs flourishing export markets for China and jet fuel. The other thing to keep in mind is that gasoline and gas oil together make up for nearly 48% of Chinese oil demand. And those are flatlining at the very best for the next 2 or 3 years. If you look at jet fuel and naphtha, so naphtha for petrochemicals, the two together is about 22% of Chinese demand. So there's no way we are going to see any amount of even a high single-digit growth in jet fuel and naphtha. And I have my doubts on that number. None of that is not going to make up for the sluggishness or the slowdown we are bound to see in diesel and gasoline.
Omar, I wanted to get your thoughts on the question we touched earlier and in the survey there, your outlook for OPEC Plus, obviously the major players in this region, and there's some disharmony between, welcome your views on the famous FT article from September that said possible market share war, Iraq overproducing, other producers overproducing, the harmony of this group, and particularly, let's say, the Arab core of it. Do you see that holding? Your thoughts?
So I think this is like that quote by Thomas Jefferson about needing to refresh with the blood of patriots. Every now and then, OPEC, the ill discipline overcomes them, and they need a little bit of a quick price war just to reassert to remind everybody that if they don't cooperate, they'll be in a much worse position. And a country like Iraq, if it overproduces when Saudi Arabia is complying, it may benefit. But if if everybody's overproducing, then Iraq is in a much worse situation. As I say, for a while, hypothetical talk might work, but every now and then you have to give everybody a kick up the bum. So what I expect, I mean, I voted in the poll that they will cut supply, will increase supplies as expected. And then what I expected after that, shortly, there'll be some sort of summit, and then they'll get back. Just a little bit like what we had in COVID at the beginning, we had that very brief price war between Russia and Saudi Arabia. And then after that, it was all, holding hands and hugs and kisses.
And a very profitable few years, one would have to say.
Yes, exactly. So I think, and this is a very good proof of concept for Saudi Arabia and those who are willing to show more discipline. If we go the price share way, we're all gonna lose, and those cheaters are gonna lose way more than we are. How about we just stick with what's been working so well for the last 3 or 4 years, as you said?
Brian, last word for you, literally one word that you will choose. This is I'll have you on before the infamous election now in the US in 2 weeks. How do you feel it's going to go? Give us a kind of you put you on the spot for a call at this point.
I actually believe it's going to be Harris. That's what I believe. But
is that what you hope or you believe?
It's what I believe. It's actually
right. Okay, that's good.
It's actually what I believe. Now the problem
Brian
is
likes Burger King more than McDonald's. That's why.
No, but I actually believe it's going to be Harris because there's so much mobilization on voting. That said, if you look at every poll every other day, there's a coin flip, and so it truly could go any which way. In other words, I say I think it's going to be Harris, but the odds are so thin that some small little twist. I mean, there was even discussion about some of the hurricane damage which came inland into Georgia and North Carolina might actually prevent some of the voting that might skew some of the election. So I think it's a very narrow margin. Yeah. So
when you think about those sort of swing states and any little event in those swing states that could tip something 1% this way or that way, that's the razor thin of it. It looks like that's similar to the oil price. We're back to that pre-October 1st low 70s, no wind in the sails and looking for direction. We'll see if it can come from anywhere other than some further unfortunate geopolitical spikes. Let's hope that is not the case. Not good for anybody or anything. You guys are awesome. Thank you so much. Brian Perry in Colorado, Omar El-Baidly in Bahrain, and Vandana Hari in Singapore. We're all around the world in 30 minutes. It's awesome. Thank you guys. Have a great day. All the best.
Thank you.
And happy birthday.
Happy birthday.
Oh, happy birthday to me. Shukran. Thank you so much. Thank you guys. Thank you.